Well, welcome back, everyone. Fragile markets, as described earlier in the week in videos just like these, did display their fragility in markets today. Now, the S&P 500 is still in good shape to repair the pullback that we've seen happen today. And the pullback was signaled by the TRP toolkit well in advance of that precipitous fall. In fact, if you focus in on the very right-hand side of the screen, the SPY on a 5-minute chart signaled a TRP sell as of the 1:25 p.m. Eastern Time bar, well ahead of that precipitous fall. Now, coming into the week, we noted very clearly that we have a solid backbone on the weekly chart. However, the daily chart's continued rise is coming with the TRP momentum crossover lines well above the top of the channel, meaning we're using high-octane fuel where we can make bigger price moves with less bars or time, but it's going to run out fairly quickly. Now, and we saw a bit of that start today. When we take the time frame down to a 4-hour chart, you can see that the continued rise that took us up to the target 2, took us above the target 2, put us in the running for a runaway breakout. Well, we didn't just come down and back test that target 2 and hold in that 473.79 area. We blew right through it. Now, our expectation on the week was coming up towards the $476-ish area. And we were expecting that between yesterday and really this morning. And then a pullback of $2 to $3.50. Now, we got a $6.50 pullback, exacerbated by the fragility of the market overall, the thinner market that we're in. But powerful tools came to the traders' rescue, if you will. We note very carefully over here that the hourly chart for the SPY, which was in a TRP buy from early December, had some sell signals, but in an uptrend with the channel sloping up, resumed its upward move. And as you may well know as a TRP student, we get a test of that, a meet of that target that is in between the target 1 and target 2, that midline target, quite frequently. And it did occur in markets today. It was then followed by, break the time frames down and have them on your dashboard like I do here, a TRP sell signal, and that presented itself at 1:25 p.m. and again, well in advance of that precipitous fall. And the big question is, did you see this kind of thing coming? Well, we saw a higher probability for a $2 to $3.50 pullback, but the market has been largely volumeless over the course of the week, and that did aid and abet a bigger price move. We did very clearly see from a high in price back over here, and this is on the 14th of December, highs in the subchart, the momentum crossover lines, higher high in price, but lower highs, as you can see in the momentum crossover line. Now, again, tactically, the idea was watch your back on a fragile market rise, keep the leash tight would be the idea, and then be vigilant for signals in the now that can lead to, well, what happened today. Now, is there more continuation down that is likely? Now, a 1-hour chart throws its signal out 3 to 6 hours. It does have a confirmed TRP sell with a target 2 down in the 463, the high 463s, and a target 1 in the mid 466s. The 4-hour chart has also got a sell signal with a confirmed target 1 in and around the 460 to 61 area. So are we headed down towards that 460 area, or are we more likely to find support, somewhere between 467 and 465, for example? I think the latter is more likely. Go back to the weekly chart, take a look at the value of the fast speed line. That is a support structure. It is sitting at 465 and 51 pennies as of the end of a day today. And that would become a primary candidate for where this pullback can come down to test and then potentially try for another bounce. But breaking down below the slow speed line on that weekly chart, which is sitting at around 461 and 59 pennies, that's where something more pernicious could be taking play. Now, that's not off the table in terms of potential outcome. It's the less likely outcome based on the trend still being in play. You can see the channel sloping up on the weekly, the daily, and the 4-hour chart. Now, with sell signals on the 4-hour chart that throws its signal out 3 to 5 days, we have to be very mindful that there could be a reality where we see 461 before any attempt at repairing the market actually sets in. Now, the call very simply is we're looking for completion of this move down, probably completion in the area of 467 to 465 at the low end, and then a attempt at a bounce back up. And that will, of course, have to be evaluated live with members in the active trader room and on live charts for individual traders to identify, is it a buyable dip at that point? Is it the source now of a Santa Claus rally? The alternative here is we come down to the 467 to 65 area. We have a dead cat bounce, and that bounce could be as strong as $5, $4 to $5, and we test the underbelly of a then falling channel on a 1-hour chart basis. That would set up a bigger move down, one that very likely would take us somewhere between 463 to roughly 460 before any talk of a repair or bounce back up would be in play. Now, we prepared members in the active trader room earlier this morning with, if you're seeing the market rise and volatility is rising at the same time, that's telling you something. If you're seeing the market rise and get to a threshold that we deem as a turnaround point, which we deemed 476 to 477, and we would be looking out and watching our backs at that time. Those are the comments that we were making, and looking for long volatility type trades, which worked out really, really well on the day overall. A little bit more to go potentially, but again, with the big, strong, uptrending backdrop in the market, a profit-taking pullback that then saw selling beget selling in a thinner market, less volume and wider price moves, precipitated by negative divergences and, of course, a Fed speak that can effectively tug at the heartstrings of those hopeful for a Santa rally. Well, we had a mixture of events that played out, giving us a pullback that has not yet gotten out of hand, if you will. Below 465, we're in a spot where it is higher risk, without a doubt. And below 460, something has broken, and at least 2 of the wheels have effectively fallen off the bus at that point. Now, stay safe out there. Season's greetings to you and yours. Hope you have a wonderful holiday weekend, and hope that you are able to stay safe and utilize some of the insights in a video like this to help with information for decision making. A big shout out from the BecomeBetterTrader.com team, the WealthCharts.com team. Season greetings from them to you and your families and friends. Wishing you a fabulous holiday long market weekend, and looking forward to seeing you on the flip side. Bye for now, and thank you for watching.